This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
Oh, g'day. How you going? Phil Tarrant here. Hope you're well. Host of the Smart Property Investment Show, sometimes host. I'm now being joined a lot more by my colleague, editor of real estate here at Momentum Media, Grace Ormsby. I haven't tuned into any of her podcasts. She does a great job, in many ways better than me. So she's been navigating, steering a lot of conversations we've been having with people inside of the property industry recently, trying to get their sense of what's going on in this market. But I think it's clear, and you need to pick up the paper and see what's going on. Markets are cooling largely universally. Now there is some pockets which are still sort of striving ahead, and I think to the Central Coast, for example, but your capital city markets, Sydney and Melbourne, cooling, and even Brisbane, which has been rocketing along. There's still some pockets of it I'm starting to see sort of flood now, but to give some sense for it all, and you can't get caught up with this stuff because people think a cooling property market is a bad property market. They think that prices not rampantly growing as they've been growing over the last period of time means that we're moving into a bad property market. And that is not the case at all. All markets moves in cycles, particularly property, up and down, left and right. Just because it's not growing as fast as it has done doesn't mean that property doesn't make a good asset class. So you're going to probably hear a lot of people talking about this who aren't informed around dinner parties or down at the school kids sport, telling you about how property's not a bad asset because it's a bad asset because it's not growing as fast as what it used to. But yeah, again, just be careful who you listen to and make sense of it all. But keep tuning into the Smart Property Investment Show. Some great conversations there with a bunch of people who know what they're doing. What I really enjoy on this particular podcast, chatting with property investors. And, you know, for thousands of chats now I've had with property investors, and there's a lot of commonality between them all, but there's other things that make them unique. Everyone's wired a bit different. Everyone's reason for investing in property, it fluctuates, not only now, but just where they are in their buying cycle, the maturity of property investing, but then also what they intend to do with it. What I find, I've been doing this podcast now for about 5 years, is that a lot of people who do invest in property end up being and become buyers, advocates, buyers agents, or become real estate agents. So it's a great feeder into the real estate profession. And you've heard me say it beforehand, I think the whole buyers agent sector in Australia will continue to grow moving forward. And you put in the sense of this current market, the capabilities of a buyer's agent in a hot market is just to get you a property largely, whether or not they're going to find you undervalued market properties during this period of time, up until this period of time, is in question. However, we're moving now into a new cycle, I think, where buyer's agents really going to start showing their worth. And that's as markets do start to cool, when the balance of power starts sitting back in the hands of the buyer's agent rather than the real estate agent. And that's that process happening now, and this process we'll go into. So if you're not yet chatting to a good buyer's agent, I highly recommend it. They can probably help you out along the way. But today's discussion is someone that's actually moved into that as a profession, but I want to have a chat to him as a property investor, Dragan Dimovski, joining me in the studio. He's, I would say, got a reasonably large portfolio. So today we're going to break it down and get some sense to how he's gone about building this portfolio on why property. Dragan, how you going, mate? You well?
Not too bad, Phil. Thank you very much for having me on the show.
No, mate, great to see you. And starting to get people back in the studio. So next time we get together, mate, hopefully we'll do it in person, because you are Sydney-based, aren't you?
Correct, that's right.
Yeah, Sydney born and bred. What's the backstory there, mate? You've always been a Sydney side. It's a good place to be, by the way.
Mate, it's not too bad. So my family moved around in Sydney. But first of all, when I was born in Camperdown Hospital there, then the parents decided to move overseas to Northern Macedonia, that's what it's called now. Lived there for about 5 years, and then decided, hey, you know what? It's not the place to be. Australia's where it is, and decided to move back. So ever since then, so moved around in Sydney.
Yeah, there you go. And I challenge a lot of people to actually say, I know where it is on the map, Macedonia.
Yep.
I remember I actually went to university during a period of time when Balkan conflict was smack bang in action. So I worked out pretty quickly the machinations of the Balkan area and all the different personalities and the people that live there, right? It's a crazy old joint, mate. Do you get back there very often?
I was actually there, not Macedonia. My mother's from Serbia, so I actually went over there. I just got back last week. Yeah. Hence the croaky voice, because it was snowing over there. It was pretty cold, and then climatization coming back, and I'm copying this with the voice now. So yeah, but it was good to see the family. spent 2 weeks there, 1 week in Turkey before that. And it was good. Came
there
back.
You go. Good to be back in action.
Back.
And your business, well, a bit of chat about the back end of the check. So I actually want to get a sense for how you're seeing the market right now. But you haven't always been a buyer's agent. What were you doing beforehand?
So I pretty much followed my hobby since I was 13 years old. I was doing photography.
Okay.
So photography all the way. After high school, I actually studied electrical engineering, still following along with the hobby of photography. Then that sort of, it was hard to break it to my parents to say, hey, mum, dad, I'm not going to do electrical engineering anymore. So they're like, what are you going to do? And I said, photography. So they said, yeah, right. Sure you are. There's no money in that. So went and studied photography for a year, worked for a few studios. And by the age of 23, started my own studio in Ashfield.
Okay.
Did that for about 13 years. Was pretty successful. Started off with about 3 employees and ended up with about 15.
Wow.
Yeah.
And what sort of photography were you doing? Just all
mainly portraits. So if you ever go to the shopping, well, back in the past, you ever go to the shopping centres and you see someone promoting and trying to sign you up for a free hair and makeup session, good chance that was me.
So people would come in and get some shots done, like family portraits and all that. Well, my first job, and not a lot of people know this, Dragan, but it's highly connected. My first job was the cleaner for a photography studio in Wentworthville, where my mum worked. So I'd go in there for about 13 years old and had to dust all the frames. This back in the good old days when there was chemicals and stuff, right? Like there was like proper photography. It's none of this digital art. But photography was sort of put in my blood early on. My mum was a photographer, so.
Oh wow! So was that Hollywood Studios by any chance?
No, it wasn't. It was called William Tell. Studios down there on the high street, and they did a lot of like studio stuff and like weddings and all that. So it's like proper good. It's a good outfit. They did really well, and they were super popular. But I was brought up around photography studios, which was good fun. So you're giving all that up now, mate?
Mate, I gave it all up. I noticed the change when digital was coming in. So I would get people in and say, why would I spend $100 on one photo when I could take 1,000 shots and get one good one from my phone? So how do you argue with that?
That's true. And it's probably a bit easier to take a photo now because you look at it on the screen, you know what it looks like, but there's still the art of photography and lighting and composition. And that is still as relevant today as what it is. But so you just do it recreationally now as a hobby, or do you always get the phone call going, oh, third cousin XYZ is getting married. Can you shoot it?
Exactly. and I pretty much palm it off to someone else. So, but yeah, I still do it as a hobby, having kids, and, there's always that time of the year that the wife, nudges me and says, okay, come on, time to take the family photo.
Yeah. Well, so it is a lot bit easier these days. And the cameras are so forgiving now, right? Like you used to get 30 odd film and you'd sort of cherish every single shot of it, right? But now it's, just take 1,000 and rip through it. But anyway, this is not a photography podcast, especially a podcast around property. So let's get the property. So you obviously make us a good bucks as a business owner running your studio. So that's probably where you started when you started investing in property, I would imagine.
Correct.
Let's sort of get stuck into that. We'll just go to a quick break. Stay with us, everyone. When we come back, we'll break that down. See you in a second. Creating wealth through property investing starts with getting the right finance in place. At Finney Mortgages, our brokers specialise in investment loans. We know the ropes to get even the most complex deals approved fast. With access to over 50 lenders, we have the know-how and connections to get better rates, improve cash flow, and release equity fast. So if you're looking for a mortgage broker that gets property investment, book in a call with the Finney broker now. Head to finny.com.au. That's FINNI.com.au today. Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Dragan Dimovski. Photographer extraordinaire. Now he's a property professional, but you've got to start somewhere, mate. So working in your studio, a lot of staff, a lot of responsibilities, worrying about your balance sheet and making money, and so banks are happy lending you money. So tell me about the first property. How and when did you get stuck into it, and why?
Okay, probably the best way to start is the why. So Where the photography studio was located was on Parramatta Road in Ashfield in Sydney. So I had a space behind a security company. That particular person from the security company was the owner of the property, the whole block. So I was leasing from him. Months going into it, or probably even a year into it, this guy was always driving, fancy cars, and you can always hear him coming with his loud Ferrari parking downstairs. And I'm like, geez, mate, you're doing really well with this security business. He goes, yeah, not too bad. A few conversations into it, I realized that he was into property investing. So he's been doing it for quite some time. Pretty much asked him, okay, can you give me some pointers? And he says, mate, just invest in pretty much in property. That's all he said to me. So I said, okay, here's a book, get some education. And he also handed over a ticket. I can't remember the presenter's name. Went down to Melbourne to see some seminar, that's right, down in Melbourne. And it was all about investing in property and, increasing the value with small renovation. So I read a few books, did the seminar, came back and got myself into a first property in Pymble. It was a 2-bedder rundown. I think I paid $420,000 from memory. So I got some family builders inside to do the reno, spent about 20K in the renovation and got an uplift of about 70K. That was my first investment and renovation.
And when was this? What sort of date?
Oh, geez, testing me now. So roughly about 18 years ago.
Okay. And Pymble, like Pymble's blue chip stuff, right?
Yeah. I mean, it's on the Pacific Highway across the road from the station.
It's not a bad spot.
Not a bad spot. So, it was the whole idea, stick to the nearest train station, stick to schools. And and there you have it.
And that's your first property. So because you saw some bloke rocking up in a Ferrari, you went, mate, security's
pretty much
good money. And probably back in those days, there's probably a lot of cash security jobs, I would imagine, but those things don't exist anymore. But, as a catalyst for getting the property actually, so you sort of assigned, hey, you must be successful because of the trappings of wealth, Ferrari and co. So how do you go about doing it? Properties place. Do you still own that property?
Yep. Still got that.
Yeah. Yep. What do you reckon? And you must have got it valued at some point. What do you reckon it's worth these days?
It's about 850 to 880.
Okay. So it's done what it should have done. Over that period of time. Now, in hindsight, and what sorry, before I go there, so sure. Give me, how many properties in the portfolio now?
13. Yeah.
13. And what sort of value? What sort of value would the portfolio be?
Yeah, totally. It's coming close to about 10 mil.
Okay. And what sort of debt do you hold on it from LVR?
About 4.
Okay.
A little over 4.
Okay. So you're in a pretty good LVR position on it, and we'll have a chat about that. Okay. So I just wanted some sense for what the portfolio looked like at the back end. So if you had your time again, would have you bought that property first?
So that was that property was a negatively geared property.
Mm.
So that's where it sort of pinched. Going further into there, I bought another apartment in Liverpool, another one in Leichhardt, and then here I am, spending money, putting money into this every month to hold these properties. And I've been doing that for quite a few years, and that sort of slowed me down. Knowing what I know now, I would have, looked at outer skirts of Sydney, Brisbane, Melbourne, outer skirts, bought a positively geared property, and probably not apartments as well. I would have bought land.
Yeah, it's only when you sort of look back you can actually work out what you've done different. But no, that's what you're doing now in your job with Buy Australian Property. So when did you actually shift from buying apartments into sort of houses with a land component?
About 10 years ago.
Yeah. Okay.
Yeah.
And what was the first sort of house that you bought?
The first house I bought was in St. Mary's. So this is where, through years of education, through the years of investing, you slowly realize that, hey, you know what? Buying a good block of land, a good size, you could do much more with in the future. So bought a property in St. Mary's. It was actually a dual occupancy. But unfortunately, it wasn't, I found out later, it wasn't approved. So there was actually no firewall in the middle. Another lesson learned. So it wasn't approved by the council. And that particular one, it was about 1,100 square meters. Okay. So their that idea of, hey, you know what, larger block, I could possibly eventually down the track knock it down and build some townhouses or duplex there or whatever it may be. You know, the option was there for me.
And you still have this property?
Correct. Yes.
Yeah. Did you sort of retrofit the fire water maker compliant, or did you rip it out and sort of turn it back into a house? What have you done with it?
No, we just made it compliant. That's all. The whole house is renovated, just made it compliant. Yeah.
Was that a difficult process to actually get it compliant through? It would be Penrith Council out there, wouldn't it? What did you have to do that?
Mate, I just passed it on to a builder who's a family friend. So all he did was just whatever was needed to be done. He just handed over the paperwork to sign off, and paid him.
That's right. And then it's sort of then you got it certified, and the council was happy with it. So now it's two separate dwellings. Yeah, that's correct. Cool. Yeah, and no doubt, sort of putting a few bucks positive in your back pocket, I would imagine.
Now, yes. Yeah. It was a good buy. It was, that time I purchased it for about 375.
Okay, that's got to be worth about 800 now, I'd imagine.
Plus. Yeah.
Yeah. That's St Mary's. Well, I got stuff out of St Mary's, and it's done exceptional. Well, probably bought a similar time to what you bought that. And now there's a whole new the whole new airport precinct sort of connects in with St Mary's, doesn't it? They're redoing the train station. The high street there's getting done. Yeah. I wandered that high street about 9 months ago. It's okay up towards the highway end, but if you're down at the railway end, it was like it's looking to be sort of shabby down there. But I imagine that's all getting redeveloped. Yeah.
It's it will be, correct. So they want that completed as soon as the airport is done.
Yeah, wow, that's good for St Mary's.
Funny enough, I haven't actually been there for about 5 years. So
do yourself a favour.
I know.
I drove around. I got 6 or 7 properties out there, and I spent one afternoon just driving around, just reconnecting with the neighbourhood, which I hadn't been out there myself for like 5 years or so. Just get a feel for it, and it's changing, but it hasn't changed that much. But I tell you what has changed is the prices out there. They've moved a lot different to maybe some of the dynamics of that area. But the Penrith Council and the Blacktown Council, they're working hard to grow those areas. And even in the Blacktown Council now, you're getting there is a whole tranche of properties. They're all worth a lot more than $1 million, right? They're knocking on the door of 2 million in these places.
It's crazy. Rapidly. It's crazy. Who would have thought, right?
Who would have thought? Well, someone would have thought, because they probably bought all that land that was developed on about 50 years ago, and there's a couple of families doing pretty well out that way now.
That's right. Yeah,
that's the way. That's the way it works. But so, St Mary's, what happened after that, mate? What was the next property?
The next property after St Mary's was Wetherill Park.
Okay. Wetherill Park. So that's, for those that know my geography, near Smithfield out towards Liverpool area. Yep. Okay. So southwest Sydney. And what did you buy out there?
So that just a 3-bedder with potential of a granny flat at the back.
Okay.
Yeah.
So you can really see you've changed your strategy from buying apartments, 3 apartments, or how many you bought, into this sort of buying land and sort of essentially land banking as well, as in you can actually get the utility of property today, but you're thinking about what you could do tomorrow. So you still have that property?
Yep. Still got that.
Okay. And then what happened after that property?
After that then was Newcastle.
Okay. Yeah, when was that? What sort of date did you get into Newcastle?
That was about seven years ago.
Okay. So I reckon you're doing all right there now, because that's one of the boom towns. Why Newcastle? Why'd you shift gears and head north?
My grandfather was originally from. So when my mother migrated with obviously my grandfather and grandmother, they moved to Newcastle, so I knew the area well.
Okay, and what'd you buy up there?
I paid about $450,000. It's about 800 square meter block, 2-bedder. That was converted into a 3-bedroom, 2-bathroom.
Okay,
an older style 5-bedroom.
Yeah. There's a lot of them up there. It's quite unique for the neighbourhood up there. And you obviously still have that same property as well. Have you sold anything yet? No.
No.
No. Okay. Well, stop asking that question.
The idea is holding them. The idea was holding them.
Yeah. And what was after that property?
After that property was Port Macquarie.
Okay.
So just, another one, 750 square meter block, a really, really rundown place. I had cherry pickers living in there. So it was a 3-bedroom with about 12 people living in them. That's how I bought it.
Okay.
And that one, so we pulled them out. I mean, it would have been good, but just complaints from the neighbours. Pulled that out, got it renovated, and so that time I paid about $350. The value of this would be now about $600.
Yeah, but Port somewhere, all those coastal locations now, it's Port Macquarie has been a traditional sort of retirement place. But with that comes a localised economy. And you think about Port or Nambucca Heads or Coffs Harbour, all those little satellite coastal towns have just gone absolutely berserk over this COVID.
They have. There's younger migration coming as well. So, which is obviously once you get that, the cafes start opening, then the prices start going up.
Coffee is when coffee starts getting better, because back in the day, you go to these regional towns and you probably get in trouble for saying this, but the coffee was appalling because they didn't know how to make it. But when you start getting good migrants in and intrastate locations, as in your city siders get up there, they expect good coffee. That's right. So after Port Macquarie, how many more properties is there? There's a few more, is there?
Oh, there's a few more, but I mean, I guess a few more properties after that, but then I guess from there I jumped into the Brisbane market.
Okay.
And Brizzy, and that's I've been looking at Brizzy the last few years, but I then decided to move in myself. So bought a property up Logan City Council, and that was the most recent one mid last year.
A lot of people up there at the moment, sort of Brizzy. I've been holding on for property up there, and it's only now really kicking in a gear, which is right. Nice to see. And we've been covering on the Smart Property Investment Show quite at depth, but you go and listen to those or go to smartpropertyinvestment.com.au. So we spoke you really briefly, Dragan, that the idea is it's a buy and hold type strategy. So from a yield point of view, as in your portfolio now, it's worth about $10 million, $4 million of debt in it. So you've got about $6 million in equity in it, which is pretty good going, right? Good LVR spot. It's putting money as an aggregate into your back pocket every year before tax?
Yes, it is. Yes. Yeah.
That sort of detracted a little bit, but sort of connected with your foot in your Serbian heritage. What's the attitudes like about talking about money? Like, is it sort of okay to sort of talk about, I've done this, that, and the other? And because I know when I grew up, it was like, you don't talk about money.
Look, it's an extreme in both ways. You get people that really flaunt it, and then you get people that just don't tell you anything. So yeah,
and they're typically the ones with the most dollars, right?
Probably. Probably.
So we're talking about a buy and hold strategy for you. Is there more buying on the horizon, or is that it? You've set this portfolio and now you'll just let time take it?
Look, there will be a grace period, I guess, and to see. I'm curious to see what happens with the situation over in Ukraine, which I shouldn't. Part of me says, don't listen to the media and what's happening. But yeah, I just want to hold back. I've also done a little bit of investing overseas, which held me back a little bit.
Okay.
To do anything here. So I'm sort of testing it the second time around. I have invested overseas in Dubai, and that sort of bit me in the butt.
Okay. Where in Dubai were you buying some of that sort of high-rise apartment type stuff?
No, they weren't apartments. They were the outskirts of where the apartments are. So over there, what happens is developers will actually not build buildings, but they'll actually build suburbs.
Yeah.
Okay, so if any of your listeners know how Dubai works, you can purchase a off-the-plan villa, 3-bedroom, 4-bedroom villa, for the price of literally 40% off the next suburb over that's been developed 10 years ago. So this is their way of actually getting people to invest overseas.
Mm.
And you come in, but obviously it has to be all cash. Can't be borrowed money from the bank.
Yeah.
Yeah.
So did you buy one or a number of villas?
I at that time, when I moved over in 2013, I purchased about 3 over there. And the idea was to purchase 3, then after a few payments, sell one. And then after a few more payments of that, sell the other. And then you pretty much own one outright.
Yeah.
But unfortunately, the market turned, and see you later. And that was my other lesson of not investing in a market that you don't know too well.
Yeah, and every market's got its own nuances, and if they've got some pretty slick salespeople over at Dubai. They'll tell you all the great reasons why you should be investing there, but it's still a fragile area, and things can change rapidly. The economic fortunes of Dubai. It's a really it's very volatile.
Very volatile.
Yeah, and highly connected with the region. But Bernard Salt's got a really good. He's a demographer guy, and he's got a really good concept called the Dubai effect, which he sort of applies to Australia, being that Dubai is sort of smack bang in the middle of what is a very volatile and contested region, that spreads from, the borders of Libya down to, Saudi Arabia up to Iran and Afghanistan and sort of out sort of the east with, Oman, et cetera. So it's a very volatile area and to the west out to Israel and Turkey and Lebanon. So volatile area. Everyone parks their money in Dubai because they know it's safer than everywhere else. The same logic he applies to Australia, saying, we live in this region called Asia, which is volatile, but everyone pumps their money into Sydney and Melbourne. Same logic, but things can change very quickly in the Middle East. That's for sure.
Within days.
Within days, all you need is a little scuffle to take place or a couple of airstrikes to happen somewhere, and it throws everything on its head. Do you still own those properties, or did you get out?
No, got out. I got out with the tail between my legs. So came back and needed to sort of wait for these properties to get lifted up again.
How much, if you don't mind, how much money did you dust over in Dubai? Don't want to talk about it.
Don't want to talk about it. That conversation hurts a little. So
yeah. All right, I'll leave it alone. But now you're investing again internationally.
I'm just looking over in other parts of Europe, which one of the reasons I was over there. But no, nothing is more secure than Australia. Let me tell you.
Yeah, Australian property, and hence the reason why, as an asset class, it is done and served Australians well. It is the vehicle largely that Australians create wealth in, and for those that choose to go down a self-employed route, there's risk and return with that. However, for our PAYG employees, which is the bulk of most workers, use your dollars smartly, and you can take control of your financial future through property, and that's obviously resonated with you. So you'll just hold the course with this, Dragan, like keep topping up, keep moving the portfolio. What sort of assets do you think you'll be buying into the future?
One of my latest ones, which I'm working on down in Ulladulla. So I've purchased almost a 1,000 square meter block down there, and I'll be building a duplex down there in the process. But obviously, there's been a hold during COVID, and then the increase of the prices with timber and now the rains. I've been holding that property for a little over a year and haven't laid the foundations yet. So so just waiting on that. Should be hopefully the weather clears up soon, and we can get started.
Well, it's like a triple whammy, really, for those who, and a lot of people listening to this that's sort of down that development, not massive developments, but like reasonable developments. And I know a lot of people that are sitting on property like that for like a triplex, or they might be doing some development with 10 or something or other. And it's tough at the moment because you've got, number one, a supply shortage. You can't actually get the stuff. Number two, it's a lot more expensive than what it used to. And now we've got all these extreme weather events, which is compounding things, which just takes longer, costs more. Probably another fourth thing to that is we don't have enough people to do the work.
That's right.
Try and get a tradie at the moment. How do you go about? Are you dialed in at a sort of? Have you got a good team of builders and plumbers and sparkies and all those type of people?
I just hired a building company.
Okay.
Yeah, so we've signed the agreement mid last year, and they're pretty much doing everything for me. Yeah. And
was it a fixed price contract, or is it a very
fixed price contract? And it got increased when the timber prices went up. So it's like move another 13K.
Yeah, and this is the challenge, I think, with people doing this stuff at the moment, getting it out of ground. But you've got increasing costs and longer to get it done, and a market which is cooling. So a lot of people are sort of sitting there thinking, I'll build and sell. They may be changing their strategy to, I'm going to build it and hold on to this and wait for the next cycle. in order to maybe extract that money out of it through a sale. So you got to make sure that the yields stack up, and you got good messaging in. Is that pretty hard to get a rental property at the moment? Some areas are, there's a glut, but rents are the lowest have been in a long time. So that's really interesting. So now you're helping other people do this stuff. I want to sort of get a sense from you, Dragan, about the market right now. We'll just head to another break. Stay with us back in a moment. Welcome back, everyone. Phil Tarrant, host, Smart Property Investment Show with Dragan Dimovski. What's going on with property at the moment, Dragan? It's we sort of spoke before the break that, if you're sort of playing in that development space, there's some challenges around it. You got to get your timing right, make sure you're producing or creating the right product for potentially for rental purposes. But you're helping Australians now identify property, buy property with Buy Australian Property or business. What's hot? What's not? What are you staying away from? What do you like?
Look, at the moment, we're pretty much still full force. I mean, for us, it hasn't slowed down. We are looking at focusing in the outskirts of Brisbane, Logan area, where, as mentioned before, a little bit of regional within Queensland, New South Wales. Pretty much, my business focuses on buying larger blocks of land with positive geared properties. So then they have the potential later down the track, if they want, they could subdivide, they could build on and increase value that way.
Which I think moving into this market, this concept of manufacturing equity now is going to be a mantle a lot of people focus on, because if you were sitting in the market last year, you could buy anywhere and you could expect it to go up. That's not going to inherently happen now. So you got to work out how you can manufacture. And that goes to my point around the balance of power, sort of sitting back with probably the buyer's agent rather than the real estate agent. You've probably seen a cooling. Are you getting more phone calls from agents now saying, "Hey, I've got this stock. Do you want a first crack at it?"
Pretty much. So from as soon as the new came around, we are noticing more agents are calling, which is a great thing, because then it gives us that opportunity to negotiate better with the agents. So this is why we're getting better deals for our clients, because they are noticing there is a slowdown. Yeah, definitely.
There's a lot of people out there that like the stuff that you buy. You're sort of bumping into many other people sort of on the buying hunt for these sort of larger size blocks with sort of potential.
Yeah. They're coming around, definitely. Yeah. I mean, look, you pay slightly more for it, but I think you get the benefit down the track.
Interesting stuff, mate. Well, keep connected. Let me know sort of how you're getting on, and next purchase. If you're buying something overseas, we'd like to chat about that. It'd be really good to keep connected, Dragan. It's
sure.
If you like that, mate.
Awesome. We'll do it. Thank you.
All right, nice one. That's Dragan Dimovski. Remember, smartpropertyinvestment.com.au. If you're not yet following us on social media, Smart Property HQ is where you'll find us. We'll see you next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.